2 days into the December delivery month, and there's already been 23,970 gold contracts that have stood for delivery. That's 2.397 million ounces, and plus 8,305 silver contracts, or 41,525,000 troy ounces issued and stopped so far, and the month has just started. It's also relevant to note that in November, which I would say was not normal, the silver deliveries ended the month at just under 20 million ounces, about 19.7 million, which it's really crazy because November is not a scheduled delivery month for either silver or gold. There was 1,267,000 ounces of gold delivered. Issued and stopped is the correct terminology. But the first day, this month, the December contract, day one, we saw 7,330 contracts stand for delivery in silver, which is 36, almost 37 million. That's more than $2 billion worth. And although it's not a record, it's close to it. April was the biggest record of just under 12,000 contracts. But to see a 2-day, that's day one, and 2-day obviously added more, but it's just insanity where there's already been 2.4 million ounces of gold and almost 42 million ounces of silver delivered in 2 days. This is the same type of volume that we've seen all year long. And, it's funny, you and I started talking about this in 2020 before anyone did. And now it's just mainstream mainstream in our business. And I think this will continue until it doesn't, meaning until stuff is just depleted. And it's becoming more and more obvious that this is an imminent deal. At the same time, you have one of, if not the largest short position in COMEX futures market, along with a massive short position in SLV, one of the largest ever. And at the same time, you have the LBMA, which is running on fumes. And, it's a situation where the delivery via mechanisms are breaking down. Almost 90 million ounces have been delivered off of COMEX this year, and since October, pardon me. And I don't know, since October 1st, 90 million, it's accelerating at a level that I don't think people understand or take for granted. And I think the way that you break that up is just to simply say that, let's make an analogy, right? For years, everyone pretended that, let's call it a cardboard box was full of cookies. There's a picture of a cookie on the outside. And the thing of it, and they would trade that. But now everyone is saying, no, I want the cookies. And people are realizing that the box is pretty much empty. And when that happens, this pretend cookie game, which you could call the derivatives, falls apart. And real cookies, gold and silver, become much more valuable. And that's why prices are rising. And why the dollar and other currencies may look weak when the truth comes out.
Our mutual friend Alistair McLeod has cautioned us for some time that the gearing that the Japanese banks have had to adopt because of their low yield, trying to make anything come out ahead, has gotten quite risky. But the Japanese bond market is a sovereign bond market. They were unable to defend their peg at near zero that they'd held for some time. What are you seeing, and what concerns do you have about it?
Well, I don't know if it's even defending anymore. It seems to me that this is what they want to do. This is their decision to do this by raising rates. The opinion is that they're going to raise rates again here in December and probably in January. And the truth of the matter is their economy is under serious pressure. And this could seriously affect global markets harder than people expect, because for years or decades, interest rates were kept near zero. And all of the money, whether it be Japanese pension funds or traders around the globe, would borrow, for example, yen at near zero, and then use the excess or use that free money to buy things like U.S. government bonds. And so there's over $1 trillion worth of these bonds that are owned by the Japanese pensions that are now, when you factor in the carrying costs and a rising yen and higher rates, these bonds are now basically underwater and they have to liquidate, and that's what they're doing. This kept the yen weak. It kept the dollar strong. It kept money flowing around the world, but it also is now coming home to roost, where these higher yields that you're seeing in Japan, along with inflation rising in Japan, they're under pressure to raise rates, and they're doing it, and that'll make the yen more expensive to borrow, which makes those already unprofitable carry trades even more unprofitable. And I think these funds and investors are now unwinding their positions. They're selling their bond holdings, and they're bringing everything back to Japan, which is going to put massive pressure on the bonds in existence and the currencies around the world, because it's been a piggy bank to the world where you could borrow at nothing and buy Nvidia, Bitcoin, treasuries, anything. And that has been, Japan needs to bring back this money to support its own economy. And it's going to start doing it by selling bonds. And the question is, how quickly will it unwind? Will it send the dollar crashing? Will it send rates spiking? And when you realize, again, going back to that same thing about trust, that the whole U.S., the whole system is already under pressure. I think this has the potential to trigger massive financial problems if the unwinding of the carry trade is anything other than orderly. And rates are going higher in Japan, would be my belief.
That the analogy there of the bubble of everything that people have described, meaning the stocks, bonds, and real estate all being at all-time record valuations, not just in nominal prices, but in any other internal metric you use, just saying they're in, the affordability is just disconnected from reality. What you've just pointed out of this free money, free currency from Japan has been one of the, if this was a bubble, like a bouncy house, and this was one of these fans blowing into it, the Japanese free yens for the past, how long, more than a decade, has been like one of those big fans that blows air into the bouncy house to keep it inflated. Sounds like Japan's pulling the plug on that source of free money that's been helping to keep the bubble of everything inflated. People have, guests on our channel have warned us about the side effects. Once you start having a deflationary spiral where this artificially distorted misallocation of so-called money starts to unwind, that it can start to pull down all different parts of things. Any comments from you before we move on to the weekly specials?
Yeah, I mean, you mentioned a deflationary spiral, but in other words, what about inflation you're talking about? You measure any asset you can think of in terms of ounces of gold over the last 50 years, and prices are falling against gold, against the real measuring stick. Against the dollar, they're going the other direction, and it's that the dollar is falling too. And so it's a situation where you're right. Anytime you suppress interest rates, I think that's the issue that got the whole world into problems. You suppress interest rates, and that creates distortions and all of the asset prices that have never been allowed to find real price discovery. And it tells me that the assets that have been pushed higher, when real price discovery comes into picture in an environment of higher interest rates, it will be a religious experience for a lot of people. And at the same time, those assets that have been held down, conversely, like precious metals, it'll move in the other direction exponentially when they are free, not only from manipulation, as we're seeing the problems on COMEX and the LBMA. You manipulate prices for too long, the physical demand will put you out of business. It will bankrupt you. And I think the big money understands that. And on the other side, maybe this is why you see Buffett in $400 billion in cash, and why you see all the insiders selling every single week, $2 billion a week for the last, I don't know how long, and Bezos and Zuckerberg and all of these people selling. Maybe that's why, because they know what's coming. When price discovery really truly is allowed to manifest itself in a world where money isn't free anymore, and the ramifications of it start to profoundly expand. Very quickly, I think not only will you see those assets that are ridiculously priced start to deflate, but you will also see those that have been suppressed move much higher, as there are very few safe places left yet to go. And maybe that's why we're seeing these massive deliveries. The people at that level of wealth and sophistication don't do it just for the hell of it. They know what's coming. They're 2 or 3 steps ahead of everybody. That's why I would say do what they say, don't do what, or do what they do rather, don't do what they are saying. But it takes so much effort to figure that out that if you're not researching the way you and I do every day, you won't even see it. And it will just be one of these things you'll wake up one morning and say, my God, can you believe how high gold and silver have gotten? In fact, I got one today. I got a text from my buddy, Steve. I call him Flip. And he says to me, I just saw the silver prices today. Wow. How high do you think it's going to go? I should have bought when you told me to at 22. Well, that's exactly what you're going to see happen. I think it's going to go much, much higher, and people will just wake up to a new reality. And at that point, the big money will have already been long since positioned.
You know, it's funny because some of the analysts who we have on that watch charts, and I'm thinking of Michael Oliver from Momentum Structural Analysis. He watches the momentum behind it and underneath the chart, and he says, in his view, and this has to do with what Ed Steer has come on and talked about, the record short positions for as long as most people can remember, of silver and platinum for 2, and then gold for the 3rd on the COMEX. He said sometimes markets make mistakes, and we've had critical comments added by people saying, no, markets, you can't say they make mistakes. Markets are markets. You can't tell Mr. Market he's wrong. It's like, well, when they're getting lied to long enough, they can make mistakes, and all of a sudden the emperor has no clothes on, and Michael says you're just going to see a shift to a different reality. He says gold and silver are just going to be moved into a different space. He started rattling off example after example where this has happened before with other metals, where they'll bump along in a trading range for decades, and then all of a sudden there's this awakening, and the range moves up by multiples, and that's the new normal, and people need to get used to it. And so those who are in place ahead of time will benefit from that. Those who are not won't.